Tom Bowley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this Tuesday, July 23rd, 2024 edition of Trading Places Live here at Earnings Beats. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be your host for the next 30 minutes or so as we prepare for yet another market open. GM came out this morning with some pretty nice results. Saw that they were up in pre-market this morning. Of course, earnings season is beginning to kick in. We're going to start to see more and more companies reporting their results, and we'll see what kind of reactions we get from Wall Street. Of course, later today, we'll get a couple of really big reports. We've got Netflix reporting after the bell today. We've got Google coming out with their numbers after the bell as well. So a couple of big numbers that could impact the NASDAQ 100 quite a bit. We'll see whether or not they're on track with their earnings or whether they fall short. I don't think they're going to fall short, but I am interested to see what they have to say about the next quarter, what's upcoming, and whether they're starting to see any kind of a slowdown as a result of the Fed's delay to lower rates. Those are some things that maybe I'm going to wait for after the bell and see how everything unfolds there. As far as the overall market, I mean, we had a nice rebound yesterday. We'll get into that in just a couple minutes, but it was nice to see a big rebound in the semiconductors off their 50-day moving average. We'll look at that chart a little bit later as well. But stocks like NVDA, Applied Materials, and some of those names bouncing back really nicely yesterday. Is that the end of the semiconductor weakness? It's a good question. I don't think it's over. It may be over temporarily. We've gotten through a pretty rough historical period, or at least we're about to move on through to the other side. Kind of reminds me of that Doors song, straight on through to the other side. But anyway, it's nice to see that the semis had a pretty nice day, because that's been one area of the market that really has struggled and has kind of kept the shorts in business here of late. But that may be changing. I don't know if yesterday was the start of something back to the upside. I do probably expect to see maybe some sort of an ABC type of a move here in Q3. So I think we'll get a reasonable rally at some point, whether it's now, whether it's next week, maybe even in a couple of weeks. But I do think we'll get a decent rally. And then I think it's going to come down to some important stuff with the Fed. But we'll talk about that later in the show. Let's go ahead and take a look at what happened in the market yesterday to open up this week. And it was the Monday after options expire. Normally, that is not a good day. And when I say options expire, I'm talking about the monthly. So July monthly options expired on Friday. The Monday that follows monthly options expiration has historically been the worst day for stocks since 1950. It's the worst day of the calendar month. So always keep that in mind. Yesterday, though, not bad. Actually, a pretty good day. And maybe it was because we were so weak at the end of last week. But anyway, we had a nice bounce back. Because of Max Payne, we were expecting a sell-off. We certainly got that. In fact, we had stocks like Applied Materials that went about $8 to $10 below Max Payne after being $25 above it. So, I mean, that was a huge drop, and especially in those semiconductor names. So this may have just been a dead cat bounce. I think it's way too early to tell. But anyway, with that being said, the fact that it was the day after monthly options expired, very encouraging to see the Dow Jones finish up about 1/3 of 1%. S&P 500 up more than 1%, jumping back up to 5564. Of course, we were up well over 5,600, so we still got some work to do to get back to those all-time highs. But hey, let's take it one day at a time. S&P again up 59 points. Up 1.08% to 5564. NASDAQ 100 jumping 300 points, 1.5%, and that was back to 19.8. Now, we had gotten up on the NASDAQ into the 20,700, 20,800 area, and I think we could come back down, perhaps, maybe down to that 18.5 level down the road. We'll wait and see, but I think a lot of that will depend on how deep the selling gets in the semiconductor area. Mid caps also strong day yesterday, jumping 1.25%, 37 points. We did get that breakout, as you can see. You zero in here on this chart. So mid caps had that double top. We did make a breakout which was nice. We pulled back. We're holding the rising 20-day moving average. And if you're into those mid caps and small caps, that's what you want to watch. We don't want a false breakout and then a failure to hold moving averages. That would likely lead to more selling, or at least the odds would certainly increase. I think as long as we stay above the 20, which is now above the 50, I think the mid cap area is a strong area to consider right now. But if we drop back below, I would maybe consider reevaluating that position. Small caps up 1.6%. So $3.45 on the IWM, jumping back above 220. Needs to get up to about the 227, 228 area to challenge that recent high. But again, big breakout. And the other thing was we had really struggled on the move back in April and May when we moved up. Notice that the AD line had a little bit of a surge at the beginning of that, but then just kind of flattened out. Here, when we moved up, you can see we saw a really nice surge, pulled back with price, but we want to see that AD line move back up and break out. That would be a bullish development for small caps. That would be the next bullish development. I think we've already had a huge one making this breakout above 210, 211 and checking out that volume. That speaks volume about this move to the upside. A lot of rotation, a lot of money moving in when we saw money moving out of many of the NASDAQ areas, especially semiconductors. So nice to see the small caps joining the party. Here on the transports, you can see we made a pretty nice move, made a slight breakout, pulled back. We'll look at this chart in a little bit more detail in a few minutes, but nonetheless, we were up 0.75%. So this rebound and the solid market action was really across all the major indices. Many of the key areas of the market, I think transport certainly qualifies as one of those. So it's nice to see the market, beginning to show a little bit more inclusivity. I know exclusivity is a word, inclusivity. But anyway, seeing so many different groups participate, very, very positive. The AD line on the transport's also moving up, which was a good sign as well, though we still have some work to do there. Let's move over to the ETFs and the sector ETFs that performed the best on Monday. Technology gaining more than 2.3%, $5 back to 226. But remember, this was up to 240. So we went all the way down to 220, and on that low, bounced off the 50-day moving average. So as far as I'm concerned right now, technology, we are in a trading range, 220 to 240. If we fail to hold 220, that likely is going to lead to further selling on our major indices. Remember, technology is 32% of the S&P 500. Hold on. So technology is definitely going to be a clue to watch here over the next couple of days, next couple of weeks. The rebound was off of the level where it needed to bounce short term. That was good, but that doesn't mean we're done. In fact, if we move back up into low 230s, I'm seeing a little bit of a down sloping head and shoulder pattern. Left shoulder, neckline, head, coming back down, slightly lower neckline. I don't like those down sloping necklines. A move back up into that 230 range would give us down sloping shoulders. And so if we do ultimately make that break below 220, we probably have a measurement that could take us as low as 200. So, that would be, I don't know, maybe 17% off the high. That would be a measurement of a pattern that you need to keep an eye on. Now, if there's one good piece of news so far is that on this kind of fairly significant pullback, AD line really didn't pull back much. So my question is going to be, as we move up, are these moves to the upside mostly gaps, and then we see selling throughout the day or during much of the day? Because that would mean we probably would begin to see this AD line deteriorate on the way back to the upside. That, again, would be another clue that I'd be watching for. But let's enjoy the day that we had so far. Let's not turn pessimistic quite so quickly. But hey, let's keep it all real at the same time. Discretionary stocks moving up, pulling back. This is normal. The PPO looked great, moving to the upside. Very strong move in the PPO. When you pull back with a strong PPO, normally you hold the 20-day moving average. So if you're looking for maybe another crack in the technical foundation, it would be another move lower to take out the low we saw last week. Industrials making a break after sideways consolidating for a while. This too, from a technical perspective, we should see the 20-day moving average hold. So again, nice rebounds all around. This is really good action yesterday. The right groups were leading us to the upside, but this may just be a bounce. So we've got to kind of keep our guard up, continue to watch. We're moving into August, September, October, early October. These are all time periods when the stock market historically, we need to lower the bar because it doesn't do well historically as we move into August and especially the second half of August. So we've got that window for the next couple of weeks, 2-3 weeks, where maybe we do get a little bit of a move back up. But the question is, do we just put in right shoulders in some of these charts and then back down? Do we hold key support on the way back down? That's all going to be interesting and things that we're going to need to follow together here. Autos, big move up yesterday, 4.62%. That was a 40-point rise. Looking a little bit like a possible symmetrical triangle after the huge move up, or if you want to call it a flag after a flagpole. So this would be a bull flag pattern, but it's got to execute, and it executes with heavy volume breakout. The interesting part is Tesla reports earnings, I believe, today. Let me see here. Pull up these earnings. I made a mistake earlier. It's not Netflix reporting, it's Tesla. I was weird because I was thinking about Netflix last week and I was realizing that Tesla was the following week, and I got the two confused. Today after the bell, it's Google and Tesla, not Google and Netflix. Netflix reported last week. Google will report after the bell, and they usually report, from what I recall, around 4:15, 4:30. Along with Tesla. And so that's going to be an interesting development on this afternoon. I thought there was one other earnings report that I wanted to talk about too. One that's a little bit a much smaller company is going to be ServiceNow, which reports on Wednesday. But that's in the software space, and the software companies really struggling, especially from the news last week with CrowdStrike and all the IT outage and so forth. So I'm interested to see how some of these various software companies report as well. So keep that one in mind. ServiceNow will be reporting tomorrow after the close. And I thought there might have been one other one. No, I'm not seeing it. Must be next week that I'm thinking of that's coming up. But anyway, so later today, just to clarify, Google and Tesla will be coming out with their earnings. So we got a big move in autos. And if we're looking for a heavy volume breakout, Tesla certainly could do it. Now, I don't know. I'm not calling for this. Maybe I need to take a look at that Tesla chart later. I'll try to remember. I don't have it up right now, but maybe take a look at that one a little bit later to see maybe what both of those companies look like on a relative basis as we head into their earnings reports this afternoon. Semiconductors, just wanted to point out, big bounce. There's that 50-day move right there, 50-day test. Now here, we didn't even get a breakout, showing you on the technology chart, the possible topping head and shoulders pattern. But of course, you need confirmation. I'm not bearish until I see that breakdown. But if things are going to accelerate, it's probably going to be technology and semis that do the trick. Now, what's interesting with the semis is we had a double top or nearly a double top in play. And so when you have a double top in play, the low in between those tops, that becomes a key support level. And you can see we went just a little bit below it and bounced off of that 50-day moving average. But we're trying now to get back up above the 20. Right now, we're kind of trapped between the two moving averages. If we turn back down and set a new low, that is not going to be a good sign for the stock market here over the next couple weeks, maybe even couple months. But that would be a pretty key technical breakdown that we definitely want to monitor and continue to watch. Last, heavy construction. This is in the industrial area, gaining almost 3% yesterday, 2.8%. Here I'm just seeing more of a, almost like an ascending triangle. Equal highs, not quite equal, a little sloppy, but you can see that rising low. Anyhow, a breakout above about 1430, 1440 would be a very, very bullish move. And I do think that the rotation that we've seen over the past couple of weeks into areas that were not participating in a lot of the rally, or certainly on a relative basis, were lagging. Those areas on a relative basis now are leading. I wouldn't be surprised to see that continue for a while. So I'll just kind of throw that in there as well. All right, let's take a look at the 10-year Treasury yield, get an update. Right now we're at 4.237, so 4.24%. That's down a little bit more than 2 basis points. This morning, the only economic report out that we have of any significance is existing home sales. And consensus there is for 4 million units. The prior reading, and that's for June, the prior reading for May was 4.11. So 4,110,000 units. So we're expecting a little bit of a drop there. We've had some pretty good numbers in housing. We've seen really nice reaction in the Dow Jones U.S. Home Construction Index, which is $DJUSHB. And we've had rates that have been coming down now for the last 2 or 3 months, putting in lower highs and lower lows. So until that pattern changes, we would expect that we're going to see lower rates, which in turn would help home builders as well. So let's watch the economic reports, but let's also watch that bond market and see what the 10-year Treasury yield does down the road. S&P 500, big move up over the last few months off of that April low. We had a little bit of a correction there, slight correction, then a move back up. This one has the potential to be a little bit deeper. Anytime, like I said, we're running, we're starting to show some signs of weakness, and we're about to head into August, September, October, and it's a presidential election year. You got to be a little careful. And so that's what we're doing. That's why we're continuing to suggest everyone to be a little bit cautious right now. NASDAQ 100, a little bit deeper because we're seeing more selling in the tech area. And of course, technology, while it's, 32% of the S&P 500, it's closer to 50% of the NASDAQ 100. So when the technology struggles, so too will the NASDAQ 100. And we're seeing that on a relative basis. Now, we also, if you look, let me annotate this. Let me get the annotation button and we'll zero in here. Let me grab that line. We'll just do the auto support line. See that neckline? This is on the NASDAQ 100. This is big pattern that we need to watch. We're talking about low on the left side of the neckline, 19,450 or so. We move back up. That puts in the head. We come back down. Where's that right side go? You notice throughout the entire rally, we keep putting in higher highs, higher lows. Here we go up, put in a higher high, but we come back down and it's an equal low. That's a little bit of a change in character on the chart. And so with other signals that I'm seeing, I'm just, a little bit more cautious here. Nice rally yesterday. That's great. But that also could be a right shoulder. So it's a little too early to get overly excited. I think the real test on the NASDAQ 100 is going to be this gap support area. So the bottom of, gap resistance. So the bottom of gap resistance right here is just slightly above 20,000. Look at that left shoulder sitting at 20,000. So I think if we can make a concerted move to the upside and close back above about 20,100, I think that would start to look a lot better on this chart, although it could still be a head and shoulders top. wouldn't be out of the woods, but at that point, at least we would clear the 20-day. We would clear the bottom of this gap resistance, and we would also move to a higher level than that left shoulder. Again, that doesn't mean that we're done with the selling, but those are all necessary things that need to happen for the NASDAQ 100 to go back to an all-time high. So it would be a step in the right direction. So let's see whether or not we can do that. At last check, I know futures were down just slightly. Let me just pull that up for you. I didn't give you that yet. I apologize. The diamonds right now down 0.04%. So really not much. The spider down 0.01. Not much. QQQ down 0.14%. Not much. And the IWM was actually up earlier. Nope. That's actually fallen more. Down 0.44%. So all the indices are down, but just slightly lower. Let's see what happens today. And in particular, some of these areas that we're looking at that are trying to bounce, can they get back through their 20-day moving average? Can they get back through the resistance, gap resistance that was created last week? I don't know. We're going to find out together. All right, let's get out of there and let's keep moving on. IWM small caps. So here was a big area of resistance, 210. A lot of people with only short-term memory look at this and think, okay, the IWM's never going to outperform. Well, I cautioned about that thinking earlier this year, and it certainly took a lot longer to get a breakout on the IWM than I expected it would, but we did get it. And when we got it with big volume. This is an indication to me that this is a very significant technical breakout, which means on pullbacks, I really like it a lot if we were to hit that 20-day moving average, because that 20-day moving average right now is just under 211. And if you look, the highs were from 210 to 211 back in late March and then again in mid-May. So anything back down to the 211 area would be, in my opinion, an excellent entry point into small caps. I don't even know if we go back down there, because I do think we're going to see some rotation, especially if we start seeing more selling again in the NASDAQ. I think some of that money, rather than leaving the market, will move back over into the IWM. I could see a big rally from here in small caps. Talked about it earlier this year. I thought small caps might go up as much as 50% this year. That was back in January. Now, it didn't look like such a great call for much of the first 4 or 5 months as we went sideways, but a lot of it was because the Fed kept delaying interest rate cuts, which, you know, we could have a debate, an argument as to whether or not that was the right move. Personally, I think it was the wrong move. But anyway, that's neither here nor there at this point. Let's move on to the transports. So on the transports, you can see triple top, barely broke out above. I'm not, it looked really good, but it came on the heels of 5 straight moves up. And then we pulled back. Now we're starting to turn back up. I really want to see us hold this rising 20-day moving average. The transports, when they start to move, start to give me a little bit better feeling about the economy. And that's one of the things we're going to be talking about at our event coming up on Saturday of this week. So Saturday, July 27th, I'm going to be hosting a free event, Why the S&P 500 May Tumble. I'm currently seeing a lot of short-term topping signals. I talked about those last week, but it could morph into a little bit more. These signals are just a small piece of the puzzle, and we've got pending Fed action that's coming up this weekend, this next week. And so obviously we're going to be doing some jockeying perhaps later this week and weekend. But the upcoming election cycle is going to be accelerating all the uncertainty. We've already had President Biden decide to step out of the race. Now we got Kamala Harris. And so what more, there could be a lot more uncertainty. We haven't had the Democratic convention yet. I don't know what's going to happen here over the next couple of months, but we got a lot of warning signs. I'm going to be covering all those, including warning signs on the economic reports themselves, already starting to show, maybe some cracks in the economic foundation. You need to be at this event. I mean, if you followed me all of these years, you know that I'll get bearish when it's time. Some people think I'm just a, perma bull. That is not true. And those of you who've been with me for a long time know if I see weakness, if I see issues, I will pass them along to you. So absolutely make sure that you sign up for this event. You can use that QR code that was on the screen to sign up. Also, I'm going to switch over to our Earnings Beats homepage here. And if you go into our Earnings Beats homepage, you'll also see a link to the webinar. So if you don't know how to use the QR code, go over to earningsbeats.com and make sure that you click on this link and sign up for this free event. It's part of a 30-day free trial. So I do want to let you know that. But it's still a free event. This is really good information. I think information that you need to protect your wealth. I think both traders and investors should be looking at this. I think long-term, I believe we're probably going to be okay, but that's going to depend a little bit on what the Fed decides to do. The Fed could send us into something more serious. I absolutely believe they should be cutting rates at this next meeting. I don't think they will, but I absolutely think they should. I think they should have already been cutting. But we'll see how things transpire. But if they get behind the curveball on some of these economic reports, they probably are not going to be able to dig themselves out. So make sure you sign up for this event because I'm going to show you the economic developments that also tell us that there could be trouble ahead. Anyway, let's take a look at the chart of the day for today. Bank of New York Mellon Corp. Now, this is what I like to look for in stocks after earnings. So BK comes out, posts really nice earnings, beat top line, beat bottom line, AD line goes up, price action goes up, we break out, and then we have a pullback, and we come back down into gap support zone and that rising 20-day moving average, and we bounced yesterday. I really like Bank of New York Mellon. I think this is one that will move back up, break out again. I'd be very surprised if it just were to continue moving lower. I think at the worst case, I think gap support maybe around 61 will hold. I don't know if we get all the way back down there. That was a pretty nice reversing candle yesterday. And ultimately, I'd look for a breakout above about 65.5 to start the next move to the upside. If you look on a relative basis versus the asset group with earnings, we just set a new 52-week high, or at least maybe an equal high. So we've got one of the better stocks within this space. It's part of financials. I think we're going to see the financials, especially banks, do very, very well if we continue to see rates. Well, I shouldn't say continue. If we start to see rates decline, I think the 10-year Treasury yield is already a signal from the bond market screaming at the Fed to start lowering rates. We're going to get a cut. It's just a matter of when. I believe with the most recent inflation data, I see absolutely no reason why the Fed should not be cutting right now, as in this upcoming meeting. We'll see. They've disappointed me enough in the past. I think they're going to do it again. I really don't believe they're going to cut. I think they're going to say they're data dependent. I think they'll change their wording and talk about that they are really making serious headway into inflation. If that continues, they'll begin cutting. I think it's going to be something like that. I don't think they cut at this meeting. And then it's a couple of months before the next meeting, and I wish them the best of luck on saving the economy at that point. Anyhow, couple charts, then we'll wrap up here. Semiconductors. Here's that chart I was talking about. Looks like a double top or nearly a double top. We go back down just below the prior low. We had one close that was just below the 50-day moving average. We got a nice bounce when we needed it. But can we get through the 20-day moving average? Can we get through this big area of gap resistance right here on that big gap down? Remember, we gapped down about 700 points on this index, which was probably 4 or 5% right here on this gap down. Yesterday, we gap up and move up, and we were up 700 points. But we got still this gap resistance area to negotiate. We might move into it, meander sideways for a while. I'm thinking we're not going to get back up above 20,000 before we go to a new low. I'm not saying it's a guarantee. I just think that if I had to put odds on it, I think maybe 60% chance that we make a breakdown below 18.2 and maybe 40% chance that we go up to an all-time high. I'm going to skew the results or the odds a little bit in the bears' favor on semiconductors right now. NVIDIA, of course, one of the leaders. Big bounce, but again, it was off the 50-day. We got clear support now in play at around 117 on NVIDIA. We got the 50-day moving average at 116.81. That's basically 117. So we don't, this is going to beat us over the head if NVIDIA closes below 117. Watch for that. Keep an eye. If NVIDIA goes, so go the semiconductors. I don't see NVIDIA breaking down and the semiconductors going back up. I just don't see that happening. So watch NVIDIA. I think that's going to be probably the single biggest stock to watch here over the next couple of weeks. Do we hold 116, 117? That's going to be a really interesting question, and we'll have results soon enough. I also wanted to bring up Tesla I talked about, so let's go ahead and finish on this market just now opening. Tesla did open up a little bit, $3 today, 1%. This is also like a symmetrical triangle I'm kind of watching, but it looks like it's actually maybe trying to break that trend line of highs, lower highs. So maybe today's the day we get a breakout on Tesla before earnings. Maybe there's going to be a big pre-earnings push, and then we'll see what happens with earnings. I do like what's been going on, though, with Tesla. You can see the relative strength has been building now for the last 3 months. Nice breakout, very, very heavy volume. AD line moving up to new high. Leadership relative to the autos. I mean, we're seeing it all. Or relative strength in autos versus the S&P, I meant. And then, of course, there's Tesla's strength versus the autos. So we got a leader in one of the leading groups that's starting to lead again. I wouldn't be surprised to see a good report coming out of Tesla. Will that be enough to send the entire NASDAQ higher? No. Tesla's not big enough in the NASDAQ to do that. We're going to need those semiconductors, which is why I want to keep an eye, in my opinion, on NVIDIA. And we also want to watch software. I really expect software to do well. Maybe we will look at one more chart here. Let's just pull up that software chart because we've weakened considerably. I mean, we made a breakout, and you can see these tops up here at around 6,900. We opened last Friday at 6,800, and then we reversed off of it, came back up, and we've continued to move higher. But we got some work to do. I'd really like to see software get back above that 20-day moving average. Anyhow, let's move on. Check out the summary here. You can see Dow right now down 53, S&P down 3, NASDAQ down 34. So we are seeing a little bit of downside action. Small caps also getting hit the hardest on a relative basis. So while Tesla was up, you can see not really doing a whole lot to hold up the market. Let's see what happens after the bell today. It's going to be a very, very interesting evening with both Alphabet, Google, and Tesla reporting after the bell. So that's it for me. I do want to give you a quick idea of how you can kind of follow us over at Earnings Beats. Here you see a slide that will give you some of the ways that you can kind of follow us at Earnings Beats. So again, you got a QR code. Make sure that you check that out. All right. Well, that's it. It's good to be back here this weekend. Thanks to all of our members for your patience. I actually had a nice golf tournament weekend out of town. It was nice to get back, although traffic coming back from my golf trip was absolutely horrible, which is why I wasn't able to really work on much Sunday night when I got back. So I do appreciate your patience. We'll get everything up to date and catch up with everything this week. But anyway, have a good day. And again, be careful after the close. Let's see what happens. 2 big reports coming up. Have a great day, everybody. Happy trading.